Hey everyone, welcome to another walkthrough video of Excel Wonders. We're going to look at a tool called Mortgage Ultimate Planner, and this is a super comprehensive solution and a perfect companion for anyone currently in the process of buying or refinancing their home. So when you open the file, you should arrive at this first page called Properties, where you can list out all the properties you're currently scouting. You have a maximum of 10. And to add a new property, you click here, New Property, and you need to add these following details: the address, the type of mortgage, the purchase price, down payment, property taxes, annual homeowners insurance, monthly expenses, and monthly PMI payments. Once you add the details for these, you can click Create New, and you will see a new block like this, a new blue block like this, right below your last result. I already added 2 for the purposes of this demo. And as you can see, the block here has some of the information you added in the form, but also some of the information was calculated upon the information you added from the form. You have here, for example, things like the total interest paid, the total loan, the principal and interest payments per month, etc., etc. Not only this information uses the inputs you added from the form, but also some details about your mortgage conditions. This is where you can find here in Settings. In Settings, you have some information here about the conditions that you have access to from a mortgage perspective. It asks you, for example, what is the start date, which you can define, let's say, for example, 1st of May. And then it asks you for the interest rate and mortgage duration for the fixed rate mortgage. And for adjustable rate mortgage, it asks you for the number of years fixed, the duration, the interest rate fixed for the duration of the fixed, and then what is the expected interest rate after those, let's say in this case, 6 years that it remains fixed. Let's go back to properties. If you ever want to edit the details of these, you can always click here, Edit Details, and make changes. And if you click here, See Repayment, now you access the list of all the payments you're going to have per month for this specific mortgage. You can change if you want the property here, but since you click on that button, you arrive here for this property. And here's the list of all the payments. If you want to see a yearly consolidation, you click here, Yearly View, and now it shows you per year. So you can always switch between the different views. Now let's look at scenario analysis. Scenario analysis is composed by 3 different tools that allows you to simulate the cost, the monthly payments, and other types of metrics of your mortgage depending on different inputs. So let's, for example, start here with loan choices. You first select the property, you scroll down, and then you're able to see different levels of, in this case, monthly principal and interest payment, depending on different rates and different down payments. And you have here a list of different possible down payments incremented in this case by 10,000, and you can change that, for example, to 5,000, and it immediately adjusts. And also the rates incremented by 250 basis points. And so as you click here on the different cells, it allows you to better visualize what is the monthly payment for this specific rate and this specific down payment. And you can then see the differences between spending more down payment, getting better rates, or worse rates. If you want to compare one property versus another, you can click here, View, and you click 2 properties. And it basically extends the same table, but now for 2 properties. And you can see here, you can click whatever you want on these 2 tables to visualize those differences. Now let's look at saving choices. Saving choices allows you to simulate what is the growth of your savings over time and how long is it going to take you to be able to afford the down payment of a specific property, or in this case, actually 2 specific properties. You start here with some details about your savings, the current savings, monthly contribution, rate of return, and compounding effect for up to 3 savings or investment accounts. You can add the data however you want, and then the most important one is this total savings, which in this case shows you 145,000, 3,250, and a blended rate of 5.16%. Now, obviously, you can make these changes however you want. Let's put here 25,000, and it changes completely, but let's go back and stick to the scenario I had before. In savings growth, you're able to visualize either in months or in years the evolution of your savings as you continuously add that amount of money, in this case 3,250 per month, and as it keeps growing at 5.16%. And then in terms of affordability, you can see here for 2 properties how long it takes, given your current savings contribution and current savings, how long does it take you to afford, in this case, 50% of the down payment? So 50% of the down payment for this property equates to $375,000, and it takes you 4 years and 6 months to be able to afford. Now, if you change that to, let's say, 25% down payment, it changes immediately and it now takes you 11 months. And the interesting thing you see here as well is right now it takes you 11 months at this current savings of $3,250 per month. So every month you put $3,250, and if you do that, it takes you 11 months. If you change that to $5,000, it would take you 8 months instead. So you have here 5 cells below this first one that allows you to put different levels of savings per month and then visualize the differences in periods of time it's going to take you to afford that same down payment. You have exactly the same view for a second property, which you can use for a different property, but also even the same property, but at a different down payment level. So for example, the difference between 25% and 40%, it's almost 2 years. It's actually over 2 years. Now let's look at refinance. This allows you to simulate what would be the conditions and the break-even point of your refinance. So first you select the property. Let's keep this one. Once you select the property, you visualize here the original mortgage details and then some details about the new mortgage, which some of it is going to give you, but also some of it you need to input. So first of all, the timing you need to input. Let's, for example, select, say, April 2030. It tells you that you're going to have 24 years and 0 months after that period to keep paying for your mortgage. Let's put, for example, a rate of 2%. It gives you a total loan amount of $488,000. And then it asks you whether you want the duration of the loan to be the remaining period, so the 24 years, or a new one, which you can select from this dropdown. I'm going to stick with the remaining. And then finally, it allows you to discriminate the different costs of your refinance, and then it gives you a total. Now here on the right, you can see the total loan and how it changes from the original mortgage to the new mortgage and what are the savings. You have the same view for the monthly payments. So you see, for example, that with this new mortgage, you're going to save $567 per month. And then it tells you how long it's going to take you to repay the refinance cost. So it's going to take you 1 year and 1 month based on your monthly savings to pay this $7,100 that you're paying for the refinance. And then finally, let's look at this report here, which is called rent versus buy. When you're buying a home, of course, this is one of the things you want to simulate. Is it better for me to rent or to buy? First, it starts here with some inputs you need to add in this part for both scenarios, in this part for the mortgage scenario, and this part for the renting scenario. Now, one word of caution. Here, there are some elements you can change, which are the cells in yellow and the drop down, but in some of them that you cannot change here because you have to go to settings, scroll down, and these are the changes you can make. Okay, so for example, tax rate, annual return rate, and the average annual inflation, these are numbers you need to input yourself here, and you will see them reflected in this report. But then once you populate these inputs, you will then be able to see the report of rent versus buy, and you have the mortgage scenario, and you have the renting scenario and the value created. So this value created, when you see it positive, it means that it is a positive outcome to sign up for a mortgage versus renting, because the difference in net capital between one scenario and the other is positive. So this is very useful for anyone currently considering whether to rent or to buy. And that's pretty much it. That is the Mortgage Ultimate Planner.